Welcome everyone and welcome to Rethinking Balance Sheet. And joining me as always is my co-host Ravi and I from Sage 3 Capital. Ravi, welcome to the show. And it's Friday again. The weekend
Good
is
morning.
in front of us.
Good morning, Roshan, and good morning, everybody.
Yep, and good evening to those, I guess, from the US, right, who are tuning in. So Ravi, yes. What's in store for us today?
Roshan, we've got one of a colleague of mine in today, and I think it's an important aspect of rethinking balance sheet. It's how to think through the business plans and how you want to shape your balance sheet eventually, based on what you're planning for your business. And I think it's an important aspect because it depends. It doesn't matter which part of corporate finance you're talking. Even if it's a funding through debt, project finance, M&A. Reorganization of the balance sheet, which we've been speaking about a few weeks ago, all of which requires a business plan and projections to be done. And I think a lot of people think, have to go out and get some help. But I'm really delighted to have Andrew Ho, who's a chartered accountant, graduate of London School of Economics, a very, very smart guy, to come in and share his experience, not only in Malaysia, but also what he's done in London and some of the cross-border things that he's doing in Singapore, in terms of doing business plans, projections for the deals he's done. He's done quite a lot of work. So I think we'll have a great show, and I hope, as usual, people will ask as many questions as we started to see in the more recent shows. People will come on and ask more questions. Yeah.
Yep. So let's bring our star and our man of the moment, Andrew Ho, into our show. So Andrew, welcome to our show. And we talk balance sheet, so it's not like a show that everybody enjoys and like, it's this super exciting. So Andrew, you're executive director of Stage 3. Maybe you can share a little bit about your background and how you got to being where you got to. You did work in London for 10 years, I think, with a big four firm, and you were very much involved in corporate finance in I guess one of the world leading financial centers, right? So tell us a bit about your background, and maybe after that, be nice to kind of do a bit of a comparison between the UK or London scene with the KL Singapore scene. Andrew, go ahead.
Yeah, good morning, Ravi, Roshan. Thanks for having me on. Right, Friday morning, I've tuned into many of these shows. Finally, I'm on the other side of the fence. So yeah, I think back in 2000 I can't even remember now. 2006 is when I flew over to London, and that's when I did 3 years of university at the LSE. My intention really was to just stay for 3 years and come home. But one thing led to another. I got an internship during my penultimate year with Ernst & Young. And then got a conditional offer. If I graduated with a 2-1, then I would be given a job in 2009. Now, everyone who goes to LSE really just wants to be an investment banker at the time, right? You want to join Goldman Sachs, JP Morgan. But what happened in 2009 was the global financial crisis came, and banks were actually firing instead of hiring. So I grabbed the Ernst & Young offer with both hands. Stayed on to, so I joined them in 2009. I got myself qualified 3 years later under the ICAW. So I did audit for 3 years, and then I thought, okay, I need to do something else. So then I moved over to do business modeling and corporate restructuring. I did that for a few years, and then did some capital and debt advisory. And before I knew it, I was already in London for 10 years, which was way longer than I thought I would stay there for. I got homesick, so I came back in late 2016 and joined Ernst & Young in Malaysia, and I've been around since. And I must say, it feels good to be home. It's very different. In London, of course, you're in the thick of it, right? You're in the financial center of the world. The deal flow there is amazing, right? There's just so much that you can work on. As compared to Malaysia and Singapore. London, you just have deal after deal. There's no shortage of deals. But then being there is some sort of a glass ceiling, I would say. I think all of us who have been overseas before can appreciate that. maybe because due to different cultures and the different sense of humors and whatnots. So it feels good to be home because you can speak to people who are on the same wavelength, who are of the same cultures. They understand what you're saying. They also respect what you are saying to a certain extent. So it does feel good to be home, and I have no regrets coming home after being away for so long.
Maybe, Andrew, is it, I think the big thing that they said about Nick Leeson and Barings was it's being the big fish in the small pond and the small, or the small fish in a very big pond. Is that the difference?
There, I don't know whether you're even a fish in the pond, right? You're just probably just part of the ecosystem, but you're probably whether you can actually become a fish in the pond is the $1 million question. I mean, I don't mean to get controversial here, but when you look at the organizational chart, even in London, from senior management and above, is a certain profile. And it's known you have to be really, really good, and you have to really be someone who stands out to really make partner, for example, in a Big Four. Otherwise, pretty much most people, they end up either as associate directors, senior managers, or directors. But it's still a comfortable life, right? And you do get very good standards of living over there. You have the parks and whatnot. So it's a trade-off. Some people like it. Some people just come home because there's nowhere like home.
Yep.
No, like that.
So if you so maybe let's zoom in on what we're going to talk about today.
Sure.
In terms of understanding organizations and how companies sort of set themselves up. If you look at a company that is just starting out, almost with a blank sheet, right? What should companies be thinking about as they begin the setup process?
Yeah. I think, like what Ravi captured earlier, a business plan is this one document that really embodies the whole roadmap of the business and where you see yourself going in 3 to 5 years' time. You need it for any corporate finance exercise. Ravi mentioned restructuring, you have funding, even an IPO. A business plan is that one crucial document that essentially lays out where this company is today and where it sees itself in the next 3 to 5 years. But for some companies which are probably maybe in distress, for example, and they're looking to, that's a lot of the work that we do, and they're looking, hey, where do we go from here? So some of the key considerations they can have is, you look into your business and you look at what's core and what's non-core anymore, because things are fluid, things keep changing over time. And you need to identify, okay, maybe these segments or these assets that I have are now considered non-core, and you really just focus a lot on the core side of the business. But a lot of the times we find that in order to be able to do this properly, the mindset is important. You must accept that maybe you do have a problem, and then that will open up your diagnostic mindset, and you can then perform an honest assessment of the business. Right? Only when you have an honest assessment of the business, you're willing to be critical, and you're willing to take in feedback, that's where you can really get a good business plan going. Maybe I give a couple of examples. If you are in, if your issue is considered to be a cyclical issue, so it's something that will recover over time, then your business plan, let's say over a 5-year period, the first 2 years, you just need to show how you're going to withstand the troughs of the market, and then how you're going to be ready to take off when the market starts to recover. So that's more of a cyclical market. The one that's tricky is if you're in a secular decline, where there's a permanent shift in consumer taste and consumer preference. The most straightforward answer is probably print media. I have not purchased or bought a newspaper in I can't remember for how long. The last one I held in my hand was probably one of those free ones you get in London, just outside the tube stop. They give it out every morning or every evening. But since coming home, I subscribe to the Star online, right? I pay 9 ringgit 90 cents a month, and everyone can even log on to it. So this print media business is probably tough. The next one we probably see in secular decline could be high street retail. I think a lot of effects are seen in the UK. You have BHS, Debenhams, and even Marks and Spencer's, household names that are already struggling. So if you have a secular shift, that's when you need to look into your business and what you're good at, and how you can actually reposition yourself to the new norm, so to speak, and then capture that in your business plan going forward.
Yeah, but Andrew, I mean, one of the things in this world, at least, I mean, if you think about IR4, and it's not just a digital change, right? There's biological changes with the genome mapping, and then there's also the physical changes with robotics and 3D printing and all these. Like so many, it is all intertwining. Functions are merging together. Technology is reinventing a lot of things in the business, and if when you look at your business and you have that deep dive and the assessment, and you sort of say you're in trouble, but you don't know how to get out of it because there's no clarity. There's so many unknowns, right? There's so many distractions and so many uncertainties that you're really unclear about. So how do you get about doing the business plan? Do you wait for some clarity to emerge first, or do you just dive in? Or I mean, how do you treat some of these lack of clarity that is all around us and uncertainty that's around us?
Yeah, I think, Roshan, I can break that up into two, right? You have
Okay.
uncertainty that is maybe like caused by this pandemic, and you just need time before clarity emerges. Or you have that permanent uncertainty where you say, you're 3D printing and IR4, and there is a permanent issue with where you're operating. So for the easier one, where you're just needing to buy time, you might be allowed to operate today, and then suddenly the government decides that we're going to go into a full lockdown, and then you have to close for a month. So for this, I think some realistic assumptions need to be made, but they have to be flexible, right? If you are assuming that maybe I can operate again in the next 3 or 4 months, and then what will my ramp up be? So some realistic assumptions with some flexibility, some sensitivity analysis. That should probably help in your business plan. But if you are in some permanent shift, like what you mentioned and explained, then that's where we feel, I think Ravi and I have had some experience with this. This is where the entrepreneurial spirit really comes in, right? These are the people who actually started off the business. They have that entrepreneurial desire and that spark. So once you see that things are going to a different direction, that entrepreneurial spirit needs to kick in. You go back to the startup phase again. You look at what you have done well, where you can compete, how you can compete, what are your unique selling points, where's your competitive advantage, and then you grow the business again from there. So practically you need to go back to the startup phase of the business cycle, push from there, and try and go back onto the growth trajectory.
Maybe if I can interject as well, Roshan. What we've seen is, I think I was taught by a very, very smart man when I did strategy, when I was in PwC Consulting. He went on to be the number 2 for Booz Allen Hamilton, which is the strategy end of PwC as well. He rejoined as the number 2 worldwide for Booz Allen Hamilton. And he always told me it's never that difficult. And I think that's still that basic fundamental of strategy you need to answer, that 2 questions. Where do I compete, and how do I compete and win? Nothing changes. And you must have clarity on that. It will evolve. The answer will evolve, and like I said, it's in the world of business. A lot of it is how quickly you can adapt. So if you say, where do I compete and how do I compete and win, that's critical, and that's the fundamental question. It's not when you know unknowns. In any time, there are always unknowns. Yeah, perhaps a little more at this time. And you have to just think about it a little harder. Yeah, but it's still the basic. You've got to satisfy yourself. Have you answered that question well enough?
Yeah. One of the things I think when we pull together a business plan, I guess a big part of it is going to be looking at the financials and trying to present it in some manner in the business plan. But with all these sort of variables that are hanging around. And yes, I mean, I do agree. I mean, there is some form of knowing your market and knowing this, but how do you actually present financials and business plan in such environments?
Yeah, I mean, a business plan is a plan, right? There's always going to be an element of unknowns. Like as what Ravi said, you're not going to get it spot on. Otherwise, we'll all be millionaires, so we'll know exactly where we're going to head to. I think, Roshan, even for yourself, when you were doing your round of fundraising, I'm sure that business plan had a lot of assumptions and unknowns. But from a financial perspective, maybe if you not keep it so broad, usually in a business plan you have 8 years of financials, you have 3 years of historicals, coupled with maybe 5 years of projections. And in there, in the projections, you will have your assumptions that you made. Okay, which business segment am I going to play in? What kind of growth can I expect for each business segment? Those are the key assumptions that you make. But of course, those, in order for them to be credible, you have to compare them with either your peers or your competitors to see, and of course, the size of the market to see, hey, are these assumptions that I made something that's realistic, something that we can justify as a basis for it, or is it some sandcastle in the air, some pie in the sky kind of number that someone looks at it and says, yeah, this is just a load of crap, right? So I think that's the most important part of a business plan. It has to be something that you can defend, something that's justifiable, and you have various ways of doing it. I think one very simplistic way is you look at the size of the market, you look at your competitors, and you try and work out, okay, my top 5 competitors, what market share do they have? And also, what are they good at and what are they not so good at? And then from your perspective, what do you bring into the environment? What do you bring to the market? What differentiates you from the others? And how are you going to then capture market share from your competitors over a period of time? That's probably from the revenue side in a very simplistic manner. I know it's easier said than done, but when you actually have to put pen to paper, that's when things get a little bit tricky. But from a cost perspective, usually benchmarking works. You have to. There's a wealth of information online now, right? You can cold email potential suppliers and vendors, and they will actually reply with what their MOQs are, their minimum order quantities, what are their unit costs, and you can really work it out from there. So make use of that wealth of information that we have for the internet. I really don't know, or maybe someone can share how business plans were done before Microsoft Excel or Microsoft Word or PowerPoint exists. Was it done just using a piece of pen and paper, and you just wrote it down? It's just something that I can't figure out.
It's very interesting because my old CEO at GE, Jack Welch, he one of the first things, early speeches when he first came in was, he started to look at how, the business plan process was at GE and how people presented. And almost every business plan was the vision of the aviation business, the vision of so it's very, a lot of it was a lot of fluff and a lot of vision. And he's like, threw it all away and said, look, let's, like you said, let's pen it together. Let's put some numbers. Let's start to look at execution roadmaps. And let's start looking at products and competitiveness and so on and so forth. But yeah, that's a very interesting one. And I recall that conversation almost probably about 25 years ago, where I was told about, that throwing away all that visionary business plans of the past and moving into a little bit more execution-based plans. But Andrew, I think that's a good point. But, in this pandemic, I think a lot of people are thinking about starting their own business. And setting up new businesses, potentially they may have skills or they may have certain capabilities that they're looking and saying, how can I pull together a new business? And I think the business planning process is going to be absolutely critical in the same way as you have with the business that's currently running, right? I'm assuming so, right? Talk us through that. I mean, for some people setting up a business, right? Forecasting revenue, forecasting costs, and basically starting from scratch with no historical track record might be a bit more challenging, right? What are your thoughts, in regards to the setting up of the business and also that business planning process?
Yeah, I think the business plan serves two purposes when you're starting out, right? It helps you to capture your thoughts, because that's the document which you will use to essentially be your guide and your roadmap going forward. But also often, if you don't have huge financial backing, that business plan will be required for fundraising purposes. So it does have a multifaceted approach, the business plan. And so one of the main things of, even for forecasting revenue and costs is you have the qualitative aspects of your business plan, who was key management, what's your unique selling points, what differentiates you, and so on. And that must corroborate with the financials, right? You can't have it being all rosy and you say, okay, the market is so big and we are so great, and then the financials are so, it's a bit of a dampener in a way. So everything must corroborate. I think that's the first thing. How you forecast revenue and cost, it really, I think I did touch about it previously. There are various ways of doing it, but looking at the market size is one, seeing how big you are currently based on the constraints you have, because you might want to grow to be really big, but you might not have the financial wherewithal currently. You might not have the people to be able to get it done, right? Because some of these are very capital intensive businesses, you might not have the capital to do it. So whilst you might have aspirations, it's not something that you can do today. That might be something that you might have to do over a period of time. So those are the kind of things. But one thing that I found very helpful is when you are setting up a new business or when you're putting together a business plan, is to get someone who has not been involved in the process. You just to come in with preferably someone who has some experience in the industry that you're trying to start up in, to provide a very objective review with a fresh pair of eyes over the business plan. So then this person who's not involved in the process, so he's not biased in any way. You can look at it and say, okay, this doesn't really make sense. This doesn't corroborate. Your costs look too high. Your margins are too low for a business of this nature. And that gives you really valuable feedback, because eventually when you want to take it to for fundraising, for example, these are probably the same questions that you're going to get. So you want to address them in your business plan, get a really robust document going, and then that can be very useful then when you want to use it for other purposes as well, because you have a good solid document that you can rely on and defend.
Maybe on that point of document and where Andrew said, in terms of the roadmap, one of the things that I find useful is if you actually write it down, and when you come back and revisit it, even 6 months or a year down the road, at least you got something physical there. So, I know some small businesses say, oh yeah, why do I need to write a business plan, right? Write it. I'd say write it, because in the end, you come back and say, hey, did I really think about it this way then? What's changed? And in fact, when we are going through some of the large companies and, what was said 3 years ago, it hasn't gone right. But at least we know what was the thought process then. And then we can at least look at it and say, well, what are we doing different this time? If not, what you don't want to do is, if that was the same plan 3 years ago, it didn't work, you shouldn't be pursuing it.
Yeah.
Yep. And we for those who are listening in, if you have any questions for Andrew, Yvonne Sim, welcome, says hi, and a couple others saying hi. Welcome guys. If you have any questions for Andrew or for Ravi, now's the time to shoot them in the comment section, and we will get to you in a little bit. Andrew Ho, obviously, Executive Director of Stage 3, expert on business planning and business modeling, and we're going to talk a little bit about financial modeling, but we're going to take a quick short 30-second break, and we'll be right back here and jump into the topic for today, business models and business planning, really, in terms of trying to build a business plan. So with that, let's just take a very, very quick Necole break, and we'll be right back here in a little bit. So let's watch this.
Woi, bro.
Apa dia?
Aku message kau 50 kali, tak balas.
Alah bro, aku tak ada time lah bro message. Aku sekarang tengah Necole bro. Necole lah, itu dia in sekarang. Tengah trending tengah kacau.
Kau cakap apa? Apa tu?
Necole. Kau tak tahu Necole? Google kau tahu? Necole kau tak tahu? Tak, Necole app untuk belajar bro. Semua tengah belajar guna Necole sekarang. Ilmu semua tengah guna Necole.
Share sikit lah.
Boleh bro, kau tengok macam ni bro.
Okay.
Kau kalau kau lembab, kau kena Necole bro.
Memang aku lembab sikit sebenarnya.
Bro, kalau kau nak laju, kau nak top, kau nak jadi CEO, kau kena guna Necole. Kau tahu kena pergi mana? Digital.dynamic.org. 200 je bro tahun.
Aku buat tu aku tak lembab dah.
Tak tahu bro, capacity kau macam mana. Tapi aku rasa Necole ni boleh tolong kau lah bro. Confirm.
Okay. Berapa?
RM200 je bro tahun.
Boleh lah duit raya pakai ya.
Selamba bro. Ni kau tengok ni bro. Percaya bro, kau tengok ni. Ini daripada Howard tu. Power bro.
Memang cantik,
apa
cantik.
ni? Jangan ambil akunya.
Okay.
Aduh.
Sorry. Aku teruja sangat lah.
Ni tak apa kita tunggu sikit.
Welcome to Rethinking Balance Sheet, and we are with Andrew Ho, our expert on business planning, who's joining us today on the show. I see others are saying hi, hi to Yan Ling also, and others that are joining us. And if you have any questions, any thoughts, we're talking about business planning and how you can do this right, and how you can enable yourself to formulate a business plan, and also to drive financial modeling. And we want to jump into financial modeling a little bit, right, Andrew? Because many people mention the word financial modeling, but not much is understood about what financial modeling is really about. And maybe you can tell us, what is what is a financial model when you build business plan? What's a financial model, and how does it help when it's presented in a business plan? I mean, what does it really entail?
Yeah, a financial model is actually the bread and butter of a financial modeler in any organization or in a professional services firm. That's really it's a tool that's usually built in a software. Most of the time is in Microsoft Excel, which captures the financials of the company. So you have both the historicals, but more importantly, it captures the projections. So it has all the assumptions that you have for the growth of the business, the costs, your capital expenditure, your depreciation, you name it, everything's in there. And you really start with all the inputs that you have. So those are like what I mentioned earlier, and then you will have an engine, which is essentially where you do all your workings and your calculations. And the output is normally 3 financial statements, where you have your P&L, your balance sheet, and your cash flow. And your P&L runs 3 years, 3 years of historicals and 5 years of what do you call that, projection. So I do have a very simple skeleton here, which I'm not sure if we can flash up. Essentially, this is a skeleton of a model. It's highly simplistic. It's usually not like this, but you normally have all your inputs in one page, where you have the start date, the timeline of the model, maybe the tax rate that you're going to use, your exchange rates, and all the assumptions that you apply. All of this will be housed in one sheet, the input sheet. And why that's important is because any user who picks up the model will know that if you change anything in the input sheet, that's the only place you need to go and make changes at. You don't touch anything in the engine, in the calculation sheet, and you don't touch anything in the outputs, because all of that is automated. The only thing that you would change is in the input sheet. I just put some very simple line items here. It's usually a lot more than this, but that's just a start. So you get your output that you put into your business plan is your 3 financial statement output. And that's your P&L, balance sheet, and cash flow. And usually, if you want to do it right, they have to link. So the profit that you get from the profit and loss account will feed into the retained earnings of the balance sheet. And the closing cash balance from the cash flow statement feeds into the closing cash in your balance sheet. So all 3 statements are linked. You have proper checks and balances, and it ensures that the double entries have been captured correctly in your engine. Because if you don't do it right, let's say you've done a debit but not a credit, then the balance sheet won't balance, and you know that you have done something wrong. So these financial statements are essentially just you quantifying your business plan. So you have all the qualitative aspects, know the size of the market, your competitors, what you are going to bring into, what you plan to do in the next 3 to 5 years, and then this basically quantifies everything in the form of financial statements. Yeah. And you, of course, you can have other outputs as well, where that you drive from the 3 statement output. You can calculate ratios. You can have your gross profit margin, your net profit margin, your debt service cover ratios, gearings, anything you can do once you have this 3 statement output.
Roshan, maybe just to
Go
say
ahead.
something fairly simple, but that's a very good slide, Andrew. And I'm surprised how many people just start with a cash flow statement, saying this is the cash we're going to generate, which is, well, okay, fair enough. But I think this is a great way to think, because actually the first is, in this case it's different. You say cash is everything to the business. But here we start with the P&L at first, and then the balance sheet, and then the cash flow is what's thrown out after that. But what I'm saying here is the key point is the P&L starts with the sales plan. And if you can't sell, you don't have a business. Yeah. So it's critical that the sales plan is done properly, and it says, going back to where you start. It all ties in. Where am I going to compete and how am I going to compete?
Yep.
You've got to make sales, right? And if
Yeah.
there's no sales, it's tough, right? So that's the key thing. Once you got sales, you can control costs. You can also control your cash flows and how fast you give, collect money from people, how fast you pay your creditors, and so on, and how the balance sheet takes up. But that key point is, how do I do my sales? And what are the key inputs to the sales process? It's always a unit product cost, or the volume I'm going to sell against the market which is out there, right? And it doesn't matter if it's a IR 4.0 or whatever is happening. You've got to make a sales. The difference under new technology is, previously when you looked at the market, it may have just been a market because you had physical stores. You needed to sell just in Malaysia or just in KL near your house in Bangsa or whatever it is. But today over the internet, the market is very, very different. You could be selling across the world, your service and products through the modern distribution channels. That's the shift that's happening with IR 4.0. So, I think the other day when Rafiza was talking about, think global, the market in Malaysia is too small. And especially when you're looking at businesses, I think we just talked about cameras at $100. You got to remember your competitor is somebody who can, in China, who's selling into a 1.4 billion market, and he can sell at a very low cost. So you got to sit back and say, look, when not only do I think of me selling overseas, you got to think about competitors who are coming in from global places, and they are very, very low cost and have huge competitive advantage.
Yep. And I think the way Andrew, you put it out as the outputs, right? I think each of this is big parts of the big part of your business plan, right? I mean, because when you look at your business plan, right, your revenue, right, you need to have a go-to-market strategy. You need to have very clear product, right? Because ultimately, with a good product, and not just a good product, right? You also need to have a product plan, but you also need to have a go-to-market strategy. Then you have the cost side, which is what's my vendors, what's my supply chain, what's my kind of the cost structure. And I think there needs to be a strategy behind that, right? How I build my product, how I ship my product, and how I ultimately get there. And then as you look at that, you need some form of cash, and that's going to be how you're going to finance this whole thing, and what's the strategy there. So I think these are a showcase. Ultimately, the statement outputs in your outputs section, which is number 3, is really a statement of deep plans. But this is kind of the gestation of it in the form of numbers. So I think I think a lot to think about if you are looking to start a business. If you already are starting a business, you still need to do this consistently, I think, right? And not just to continue to get the funding, but also to provide it for your shareholders and for you to continue to think about taking the business to the next level and scaling it and going to the different stages. So Yan Ling, sort of a quick comment to you. Thank you, Andrew. This is very, very good skeleton shown. Much appreciated. So I guess any other best practices that you would be able to share in terms of financial modeling?
Yeah, I think a few, right? I mean, if you're really disciplined after, like what you mentioned, after you've gotten your objective is, let's say, to get funding in, and that's done. Money's in the bank. But this model is something that you can constantly update. You can as every period passes, you can update the forecast with actuals, and you can actually then compare. Okay, this was what I projected, and these are the actuals, right? And you can do a variance analysis. So like what Ravi said, it's a dynamic thing. You keep going at it and you say, okay, this was my thought process. I've made a negative variance. What was it that I assumed that is actually wrong? So you can constantly update this financial model and keep it going. and you do that variance analysis, at least it gives you a view of what you're doing right, and where you're falling short, and then you can address the problems as you go along. So that's one thing of where a financial model is not something you just chuck into the cupboard and you say, okay, I'm done, I've got my money now, let me go and run my business. Your finance team should always try and update this model with actuals, and then do a variance analysis.
Maybe Roshan, sorry.
Go on, Ravi.
No, that's fine. I think you should finish first. I just want to give another perspective to this modeling that maybe you just want to finish first.
Yeah, I just want to, and the most important thing is the model must be kept simple. There's no point of having a model that can sing and dance. You have all sorts of functionality, flexibility, but when someone else other than the person who built it picks it up and it goes like, I just don't understand what's going on here, right? Sometimes you have formulas with about 6 or 7 nested ifs in there, and no one can understand what you're doing there. So the most important thing is to really keep it simple. And your aim and objective should be, if let's say you go on holiday or you want to pass this on to someone else, maybe to the client, they must be able to pick it up and continue where you left off, right? One thing that a lot of people try, usually those who are very technical people, is they try and put a macro in there. A macro is essentially some code that sits behind Excel, and you have these fancy buttons. It looks complicated, but actually, it's if I would avoid it wherever possible. Sometimes it's not. You have to have it in there, but wherever possible, you want to avoid it, because with code comes language, programming language, and not many people understand programming language.
Yeah,
and the moment it
in fact, someone's referencing that in one of the questions, when do you use VLOOKUP and index matching and so on and so forth. So I go ahead, Andrew.
Yeah. So maybe I just finish up on the macro bit. If the moment it breaks, because it's programming language, then the model is essentially a useless piece of a useless document, right? Because it no longer works. So keep it simple is really important. That's a very technical question, a VLOOKUP or index match. A VLOOKUP is essentially not a very robust formula. Modelers, when we are trained from day one, you always use an index match. I'm not sure if many will understand what I'm talking about, but I hope that answers Mirwan's question.
But maybe just taking back to a macro level, I just need to remind everybody that model that you looked at is not just from a perspective of a funding, so that don't leave this wrongly, right? It could be in the perspective of an M&A. That means you're putting 2 companies together and seeing how it looks. Yeah, so it's fundamental to mergers and acquisition. It also could be fundamental to reorganization, because you might have 6 businesses. You want to see what happens when I take out 2 or 3, and we are reorganizing new capital. So again, it's just not just purely for funding purposes. It's not just for business as usual purposes. It's actually matched to what you want to do and where you want your business to go, and finally the balance sheet that the company will have going forward.
Yep.
Yeah, and Ravi's spot on, right? You can have you can model 6 different businesses in one model. It might become a bit big, and then you can consolidate, and you can even build functionality to say, okay, I'm just going to consolidate 2 or 3 businesses. I'm going to leave the other 3 out. What does that do to my P&L, balance sheet, cash flow? That's all that's possible in a financial model. But back to the point, we don't want too many scenarios. We want to keep it simple. Otherwise, you've all these permutations, and it's difficult to decipher the results after that.
And maybe Roshan, coming back, and Andrew, you can add a little bit to this.
Sure.
My take about when I even worked in the late 80s for a US multinational, and Roshan probably understands this. In the US, they actually talk numbers. They talk about numbers so that they can have a meaningful discussion. We never talked general. I see one of the weaknesses in Malaysia is that maybe it's the quality of the people on, or not given enough exposure or what. What we actually see is it's more a generic discussion when we're talking about businesses, issues on corporate finance, less on the robustness of numbers, and people have actually gone through an understanding. I really hope that through these kind of programs that we have, people will get more involved in discussion of numbers, and actually having a more robust discussion of the business, as opposed to feel and touch, or etc. So that's perhaps where we like to see things going forward. I'm not sure what's the difference in London Andrew?
Yeah, in London, because the market is so big, so you normally have even within a transaction or within a bank, you have sector specialists, right? You have an oil and gas team, you have a real estate team, you have a consumer team, a hospitality team. So these are people who brief only oil and gas day in, day out, and hospitality. So they know the sector well.
Yeah.
And so even from a professional services side, you have sector specialists, right? But in Malaysia, unfortunately, because the market is just not big enough for you to sector specialize, a lot of people are generalists, like what Ravi said.
Yep.
So you are a jack of all trades, master of none. So you know a little bit of this and a little bit of that, but you never be able to take on the sector specialists like those in London and New York, because they live and breathe this one sector. And the moment they look at a model, they look at the numbers, they know exactly whether this makes sense or not immediately.
Yeah. But I mean, on the flip side, the world is changing, so there's a lot of need for broad and as sectors change. I think that there's going to be some maybe again it's a thought. We've got a couple of folks in the audience that have some questions. Charlotte says it's amazing insight. Thank you guys. Always scary and uncertain when you're starting out. So all the best to you, Charlotte, as you start out in your business. Yenling has a question. Will banks require you to provide periodical updates to your financial model when you have received your business loan? Andrew?
Yeah, it depends on what's in your covenants, really. I think most covenants, banks covenants, the operational covenants require you to provide management accounts at least. So the management accounts can feed out of the financial model. Like what I said earlier, you can update actuals for in your model, and that can spit out the management accounts for you. And usually in bank documents, in your loan documents, you are required to furnish at least quarterly accounts if you're a bigger company, quarterly accounts, if not maybe annually, and that can come from the financial model. Yes.
Yep. Thanks, Andrew. And Andrew, I think one thing I think many people get worried about is that projections generally are wrong or can be wrong, and this causes a lot of unhappy people sometimes. Including banks and shareholders and your own employees sometimes. What do you do? And add to the fact that this crisis, right? It's never easy to plan or to do financial modeling or even some sort of business planning in this time of pandemic and crisis, right? So knowing that many times projections are never right, and also this whole uncertainty that's happening. What sort of advice or final thoughts would you have for people at this point in time in the history of the world, I guess?
Yeah, I think when I started on modeling, I was told that the accuracy of projections, they start to dwindle as the timeline moves forward. So you maybe have the first 12 months is probably the most accurate, and by the third or fourth year, nobody really knows what's going to happen, right? You just have a best estimate. But wrong can mean two things, right? You can either get it wrong in a negative perspective, or you could have undershot and actually outperformed. So your stakeholders could actually benefit if you had done remarkably well as compared to what you thought you would do. But I think it's an evolving process. Whilst you put forward a set of numbers and you put forward a business plan and you can show some sensitivities that we're able to take some shots. It's an evolving document. You keep updating it as we live in a very fluid world. Things keep changing over time, and you just need to keep updating the business plan. You need to remain dynamic and flexible. If you just want to stay to that one plan that you've done 5 years ago, you probably will hit some roadblock eventually. So I think if you from a business planning perspective, keep your mind open, be willing to take on feedback, and you're willing to adapt, right? So those who didn't go into, let's say, the electronic electronic retail, who didn't adopt that are suffering now. But for those who actually adopted it going forward, they have a website and you can buy online. They're actually not that impacted by the pandemic. So you must be willing to not just stick to your business plan, but adapt to the new circumstances and changes, and then you can update the financial model for that as well.
Maybe Roshan, I just want to, maybe Andrew can give some thought, but I think the people who get very upset when you get it wrong if you're just a lender, like a bank. Perhaps an Along would be even worse. But a bank would
Along
be,
won't ask for a model.
yeah, you won't ask for a model. Just ask for your legs after that. But coming back to that, the banks would be upset, and that's where maybe, Andrew, it's what kind of capital you get in, and who you get as investors, in how well your confidence in the model would also probably drive who you go out to, maybe, Andrew.
Yeah, that's spot on, right? You have different types of capital out there. You have debt, you have some hybrids, and you have equity. Where you have reasonably certainty, then yes, you can carry some debt because you know that the cash flow, you are reasonably certain the cash flow will come in and you can service your debt obligations. Because the moment you don't, then that's a default and you're in all sorts of trouble. But where you are maybe, say, in a projects business and or you have a lot of uncertainty in your business plan, then it's obviously better to go with equity. Because with equity, there are no repayment obligations as such. Your investors, they take equity risk, but they also get equity reward. So the type of instrument that you use to fund your capital structure is highly dependent on how comfortable and how confident you are in actually achieving the results in your financial projections. The more confident you are, then you can take on a little bit more debt. A very classic example is if you're in a concessions business, you have an off-taker for 25 years, and it's government-backed, you know that the off-taker is actually of strong credit worthiness, then yes, you can have a huge amount of debt. So that's how all the IPPs and all that get funded through huge project financing. But where you deal in a business where there's just so much uncertainty, then definitely going more towards equity will ensure that you don't get into distress when things go wrong.
Yep. And we've got a comment from an audience, Gerard, Gerard Pillai, he says, good day, financial data, while of course very important, there's also social or qualitative data to measure and track. Social balance sheets versus pure financial BS. Many startups have their true value hidden not in financial data, but in qualitative data as well. Perhaps a blended model coming up soon. Your thoughts on that, Andrew or Ravi?
Yeah, I think that's right. We are slowly moving towards all sorts of funky data analytics that will probably capture some of the social elements. People want to go green and all that, and how that meets that. So it's not. That definitely is where the market is moving. You have a lot of data nowadays, and how you use that data is crucial. But the problem in Malaysia currently is, and also in other places, is the quality of data is weak. So you're not able to really, you spend a lot of time trying to massage the data to get it into good shape and form before you can actually bring out some meaningful interpretations out of it.
But you're right. The intangibles will start to come in. Human capital is another big intangible that sometimes is not taken into account when you look at the balance sheets. Ravi, sorry, your final thoughts, Ravi, as you
just to share with the gentleman's questions. Absolutely right. Look, if the market's shifting, companies and businesses have to adapt, and that's what the market is asking for. It's absolutely right. And that's perhaps, if you want to go back, have a look at the show we had with the people from Average, who talked about intangibles, which is really not on the balance sheets, even quite a lot of that is never recognized. And a huge part, until you sell the business and it's recognized as goodwill, unless there's a lot of it which is not shown. So again, but when you go out and you talk to your investors, you're definitely going to say that part of your story, right? Nobody's going to go out and say, yeah, these are the pure financial projections, but here are the other elements of our business. Here's my people. What's good about them? What's their knowledge? Here's what we are building. What's we've been investing. All that begins to show up. And in terms of our commitment to green and being diverse, all that is of course put in when you make that submission. And you tune that projections and presentations to the needs of your investors.
And Ravi, any quick key takeaways that you got from today's session with Andrew?
I think the key one is, if I'm going to say that, even especially that young lady who called us regarding her new business and so on, do a business plan. It doesn't have to be too complicated. I want that to be actually because it doesn't have to be, volumes of it. I know my wife used to work at UPS. It's a global system, and right down to every parcel was counted, right? But you don't have to do that. You just need to do something to your needs, enough for you to remember what is your thought process, because writing it down is, you'll be surprised when you go back and look at something a year later and say, hey, is that what I thought? Put it there, keep referring to it all the time, and then see how it's working, what you need to change. And what Andrew said, it doesn't have to be a financial advisor, it could be a good friend, some knowledge about it. Hey, have a look at this. You don't have to listen, but at least you get another view on what you've written. If you don't write it, it's hard to actually pass it to somebody to read. Just keeping it at a very simple level. I think those are some of the key takeaways from today.
Fantastic. Thanks, Ravi. And Andrew, your final parting thoughts, our business plan guru, financial model guru, your final thoughts for today as we wrap this up.
I'm not sure how these titles have been dished out.
It just comes about,
Just thrown me off now with this word guru. No, I think definitely, get someone who's commercial to help you out, not someone who's so technical. The technical aspects are important, but when it comes to financial modeling, there's just a lot of stuff that you can get on YouTube nowadays. Really, if you spend the time and the effort and watch through the YouTube videos, you will be able to do a good financial model. So what will actually differentiate your business plan from others is really the commercial acumen and the aspects in there. The model, whether it can sing and dance and all that, is just a byproduct of it, right? The model is trying to encapsulate your business plan, and if you are dedicated enough, you can actually go on YouTube and learn how to model. But what you really need, like what Ravi said, is a commercial input. Someone who looks and says, maybe you should tweak this, maybe you should consider it in a different way. That will make your business plan a lot more robust and a lot more, and something that will fit its purpose now and also in the future.
Fantastic. And one of the things that's happening for SMEs, there's a survey on SMEs. Of course, COVID's a time of crisis, but it's also a time of opportunity. So just go out there and check out this special survey being done by Necole for SMEs. tinyurl.com, Necole surveys, especially for SMEs. If you're part of an SME, you can go check out that survey, and maybe you can complete it. The links will be posted on social media also. If you are able to click, you'll be able to get the data. I see a couple of comments coming up from people. Gerard, thank you so much for your comments, and Andrew, funky data, thanks, nice. We also have Yen Lee, who says, thank you, Roshan, Ravi, and Andrew, for a very insightful session. And thank you guys. It's been a most engaging and a wonderful session. We look forward to seeing you guys again next Friday, 10 a.m. GMT +8, Kuala Lumpur, Beijing, Singapore time. We shall see you guys next week. Have a great weekend. It's Friday. Get ready to party in a couple of hours, I think. Some of you may have to do it at home, so unfortunately, but it's the weekend nevertheless. So Andrew, thank you again, the guru.
Thanks, everyone.
And Ravi, I know he's upset that we're not calling him a guru today, so we'll just say
No worries.
Ravi the guru too. And I think Yan Ling doesn't want to go, but she said indeed the business plan and model guru. Thank you for simplifying such a complex and daunting task. Many good key takeaways. Much appreciated. Thank you guys. So.
Yeah. All right.
So I think Andrew and Ravi, the guru thing, is going to stick around for a bit. So with that, thank you so much. And as always, have a fantastic weekend, everyone. And we're going to end, as always, with a short little closing video. Goodbye, everyone. Happy weekend.
Thank you. Stay safe.
Good show, Andrew. Well